What's going on, guys and girls? Welcome back to another episode on the Falcon YouTube channel. Hope you're all doing really well. We're going to be talking about Bitcoin today. Where is the top of Bitcoin? One of the most common questions. We're going to be going into what is actually wrong with that question in the first place and how it's affecting your psychology. This kind of takes me down a trip of memory lane. I remember when I first started trading in 2008, the big thing back then, because I started with stocks, was penny shares. And even myself, I got caught in a few things like this, where you're trying to predict, you're trying to call the top. I'm going to go into the psychology of what's wrong with that. We're going to be going into Bitcoin. We're going to be going into the holistic view on how I personally believe will be so much more effective for you moving forward, and how you don't get sucked in to investing all of your savings into something that A, you probably don't understand, and B, probably thinking you're going to get rich quick. So in 2008, that period of time when I started learning how to trade stocks, I was also interested in some penny shares. There was things like copper shares, African copper was one of them, and just overall thinking that, right, if I invest some money here, well, it's going to boom. Now, it's not because I'm comparing Bitcoin to penny shares or anything like that, because penny shares didn't have as much substance. However, more on the risky side, it was the psychology of the same thing, where the average person that's working, they take some money, they hear about the next big thing, and they just invest all their money into it, thinking, right, it's going to get me rich quick. So this is what is happening right now in the crypto market, whether it be altcoins, whether it be Bitcoin, whatever it is, the same thing's happening. We saw last time when it was at 20K, how much FOMO? How much FOMO happened when it was at 20K? And the problem with trying to predict the top of something when there's not enough data is that what are you comparing it to? Because when you're trying to predict something like, let's say we're looking at gold or we're looking at oil, right? Is oil suddenly just going to go to $400 a barrel? Probably not. Why? Because the drastic measures of what would happen in the world with that happening. So we can kind of get an idea as, right, yes, things break all-time lows. Yes, things break all-time highs. But you have some comparisons. You can look at these type of commodities, see what they're used for. You can compare it. When we're looking at something like Bitcoin at 20K per coin, whether you're using whatever model, fib extension, you name it, there's probably lots of different ones. But how could you know? How could you know that it's going to be that one with no testing? But what we can do, which I'll get into in the chart work in just a second, is the pullbacks. So we have something to look at on the pullbacks, and what that's going to help you if you're just jumping into the crypto market for the very first time is making sure that you're not getting FOMO and then just jumping in at these time highs. You're just thinking, right, well, it's going to keep going, it's going to keep going. And then there are people who's remortgaging their house to pull savings out to invest into these things. Now, the problem with that is that when you start to put all of your eggs in one basket, what happens if that doesn't work out? Then you're very stressed. You have to think about diversification as well, which we'll get into. So let's jump into the charts, guys. We've got a few things to cover. I'm going to start off with Bitcoin. So as you can see, BTC, USD, this is the point that I'm making. The psychology of trying to call something and trying to get in at the top of the bottom is probably one of the biggest psychological issues that traders fail, because they're always trying to be right. They're always trying to be correct, thinking they got the next best indicator or fib extension is going to happen. Now, it's not that eventually someone's going to get it right, but rather than trying to search for that of where the top is or where the bottom of something is, trade what you can see. Look at the pullbacks, look at what you actually have, because it's relatively new, but now you can start to see in the data. Now, yes, there's more institutions involved. Yes, things like PayPal, Tesla, they're keeping it in BTC. All these type of things, there's more confidence, but there's also equally on the other side, people that are very wealthy, very powerful, that speak against it. Either way, whether you believe in it or not, the point of this video is not to give you a lesson on crypto, how it works, any of that stuff. By no means am I an expert in crypto. However, the psychology still applies. The patterns, the same thing. Now that there's more volume in the market, more liquidity, etc., there is more opportunities to be able to predict these things on more of a short term, which is why we look at commodities, why we look at indices, Forex, crypto, all of it holistically. So if you're good at technical analysis, you can essentially apply that to anything. But let's take a look. This is just a brief overview. So how many people that reached out to me at this point? So if we just literally look at the top here, right? So you remember this. And that this was around 20K per coin. Who was buying here? How many people? Right, who was buying here? Now we can see flat line, flat line, flat line, boom. Then what happens? People buy out of FOMO. They fear the missing out. They're thinking, right, they hear the news. And again, this brings me a trip down memory lane as well with the news. What I used to do, I would literally go onto the London Stock Exchange. I'd be looking at the news. I'd have Bloomberg on, thinking that I've got an edge in the market because there's a bit of news that's come out about something. Not realizing these things are already priced in. This is the same thing. You looking online and seeing that Tesla are accepting BTC as payment, is not your edge. It's what the technicals are the technicals. So I want your mind to start thinking about what you see online, what you see on the news. It's already delayed. What you want to take your faith in is in the technical analysis that is consistently playing out, because you may be right on the macro fundamentally, you may be correct at the bigger picture, but in the moment when it matters, when you're trying to invest your money or trade it, that's a very different ball game. So focus on what you can rely on. But the point is here, if you're just coming into crypto for the first time, maybe you've never traded before and you've just invested a bit of money into crypto and you're thinking, oh, that was me. I actually bought around 18. I had a bit of FOMO there and then it just pulled back. I put 20K in and pretty much all of my savings went all the way down, and then I ended up selling it at a loss, and then it went up. And of course, it's because you're inexperienced, and the reason why you got into it in the first place is because you want to get rich quick. So firstly, we have to address that fundamental there is that you want to make sure that why are you doing what you're doing. So the point is here, who was able to know that, right, yeah, it was definitely going to be around 20K and then we was going to pull back? No one knew that. It could have gone to 25 and then pulled back. However, now we can look how far it pulls back. Look at how far it pulls back every single time. And if you remember when we were zoomed in, looking at something like, wow, like look at the all-time high around 20K, and it's just hovering around here, we're gonna move up to there. Now, when you zoom out, like so, that looks like nothing. This looks like nothing at all. It's all relative. So although we can't predict the highs, we can never know exactly, right, this is where it's going to stop. And you don't want to be in that mindset because you're likely trying to do that with everything. And that is gonna lose you a lot of money, trust me. But here we can actually see, right, pull back 40, 50%, pull back 50%, 60%, whatever the exact percentage is. The point I'm making is that you have to be able to stomach deep pullbacks. And that is something that we can essentially predict, quote unquote. If you want to go down that route, you can actually see, you know, like I said with the comparison of oil. If you've got oil, it's very unlikely that oil is going to go to $400, $500 a barrel. Where with something like this, who knows? We could just be hovering around here and we could be at 90K. Right, but then the pullback could be even deeper. That's the point that I'm making. And if we actually look into this in a bit more detail, so if we go daily chart, after we broke that, and then we got to all-time highs at around 42. Remember that? 42? We're thinking, right, is this the top? Someone might have had a fib extension, someone might have called it, like, I'm not interested in that type of game. However, 42 all the way back down to where? Right, 28, deeper pullback. Now, what's interesting with this pattern that we're seeing right now is that it would not be unusual. Let's say that we did top out around this area at, let's say, I don't know, 65, 70, around this sort of, or even now, even just around this area, around 62. Let's say we topped out of that area. Would it be unusual for a pullback to just slowly move back all the way back to here before we move to the upside? No, it wouldn't, right? Because it's getting stretched more and more and more. And this is what I mean about before. You were zoomed in looking at that thinking, wow, look at how much that's moved, and then it just corrected back. Now when you zoom out, you're like, oh, that's just looks like a tiny little bull run, right? So you can see the bull runs happen. However, the corrective cycles, you can't pinpoint exactly when that's going to change, but what you can have a gauge and an idea of, right, pullbacks will probably be quite deep, and the pullbacks are getting deeper and deeper. So then you have to be able to stomach that. But in the moment, what happens psychologically? You buy here, it then moves down, you think, it's over, I missed it. You know, we could be coming down to zero. You sell at a loss, at a massive loss, and then it goes. The same psychology is happening there, the same psychology is here, and it will happen again. I cannot tell you where the top of Bitcoin is, and nor do I care about where the top of Bitcoin is. However, we can look at the cycles, we can look at the bigger picture. Yes, there's more confidence than anything else in the markets before. People are always asking as well, things like, is this going to be the new financial system? Just think about that question, right? Just think about that question. Is this going to be the new financial system? Hypothetically speaking, let's say it did change it, right? And I'm sure loads of people listening right now that are heavily into crypto thinking, right, yes it is, and they've got all these reasons. That's not my argument at this point. You just have to understand how the world works. Do you think they can just roll things out in 6 months? People are generally panicking, sending messages before thinking that, right, should I shift all of my analysis over to crypto because suddenly I'm not going to be able to trade gold or all these different instruments? Of course not. And technical analysis is such a powerful skill within itself. It doesn't matter what happens. Let's say hypothetically speaking, something did change in the future. You've already got a powerful skill set where you know how to analyze, you know how to trade. So you can apply that to lots of different indices, lots of different instruments. You could do it. So you've got a powerful skill within itself. So that's the point that I'm making here. And don't get sucked into this trying to call the top, call the bottom, chucking everything in one place. There's a reason why wealthy people don't just have all of their money in one place. Now, there's the other side of the coin, which is having all of your money just in lots of different things that you don't understand is also not smart, because diversification for the sake of diversification isn't always smart. Because if you don't understand it and you've just got money here, there and everywhere, well, you don't understand the sectors you're in. Don't invest money into something that you don't understand. That's one of the oldest, wisest saying. There's a reason for that. Yes, some things can be exciting and you think, right, well, I'll just dabble in a bit of this, but it's the wrong mentality of actually building wealth. So if you're someone right now that's thinking about, right, but I want to invest in Bitcoin, all the power to you. I want to invest in a few altcoins. I want to invest in Litecoin. I want to invest in Ethereum. And I'm pro those anyway. But the point I'm making is make sure that you're not coming into this market right now thinking, I've heard everyone's involved in crypto. I've seen it booming. It's on the news. I need to get on this train. And then you start taking literally every amount of savings you have, or a lot of it, chucking it in there, very inexperienced. Let's say you even put in at 58 or something like that. In a couple of years from now, if Bitcoin's sitting at 170 per coin or 175, we're up here, technically you've done well and you've made money, right? If you've never traded before and you've got zero framework, or you're very, very new to trading, you tell me you're going to be able to deal with a pullback like this. You think you're going to be able to look at your, let's say, 10 or 20,000 pound investment, pull back to this area before it goes again? Probably not. You're going to be panicking here. You're going to be selling everything. Cause problems in relationships, cause problems with family. Like, oh, why did you invest that money? Like, you don't understand it. So the point I'm making here is that if you're coming into this space, whether it be crypto, whether it be Forex, you need to get educated. You need to get educated. This is such an exciting time right now to be analyzing, especially this data, because more and more so BTC USD out of all of them has the most predictable price patterns. Before it was difficult, I wouldn't even touch it. Now I trade it. Now I don't trade it as my main thing, but I'm trading it. And not every single coin is amazing to trade. I would say BTC USD over Ethereum, well, Ethereum's pretty decent actually, over Ripple is better from a pattern perspective. But more and more people are in the market, it's becoming more predictable, right? Yes, it's very, very volatile. So that's one thing that you have to understand as well. But it's becoming more and more predictable. So I'm zero interested in thinking, right, who would have known when we pulled back to this area, very, very deep, pulled back up to around here. I remember when we were floating around this, there was potential larger double tops here that we was looking for some deeper pullbacks before we move high, but we broke straight through. Like, no one's knowing the tops of things, but what you can see historically, literally study it, look at the dates, you can see how deep they pull back before they do move higher. And that's something that you could have more confidence in. So if you are one of the people that ends up predicting it, you know, all the power to you. But you often find with people with that type of mentality that are obsessed with trying to call things, end up making some really, really bad emotional decisions, and their ego is so involved in wanting to call something, they lose money anyway. So just a bit of a lesson there. I just wanted to give you more of a holistic approach. And for those of you that are new coming into this space, I feel like it's very misleading for everybody just selling you on the idea of like, invest now before it's too late, and you get sucked in emotionally. The reality is you want to be able to look at this holistically and invest what you can afford to lose. Invest percentages. Start looking at, and this is not me giving you financial advice, this is just me giving you some opinions from my experience, but look at your amount of capital, pick a percentage that you want to invest your money in. If you weren't able to access that for the next 5 years, you need to be comfortable with that. So let's say, for example, you have £10,000 and then your percentage might be, call it 10%, right? Let's say it's 10%. You can afford to invest 10%, and whether you touch that for the next 10 years, doesn't matter. Perfect, all the power to you in that sense. Because that way, you can deal with these deep pullbacks. You can deal with a 50, 60, 70% pullback if you are long Bitcoin and you're able to stick it out for 5, 10 years. Fine, that's perfectly understandable. But don't go in with the mindset thinking that in a year's time, you're gonna chuck your 10K in or 20K in, and if it moves from here to here, you're counting your dollar amount and you're thinking, right, I'll get out then. I've seen this so many years, since 2008, I've seen so many different things like this. It's just another one of those things. Yes, this has a lot more substance to it, much more technology and much more longer term future to it. However, it's the same psychology of why people are getting involved and why people will keep losing money. Same behavioral patterns that we're seeing in the market over and over again. It's never changed and likely never will. So We'll see how that plays out. But all in all, I'm very pro crypto. It's just I wanted to give you more of a holistic approach on this. Hopefully it's given you something to think about, especially if you're a beginner. I would hate for people to be sucked in and invest all their money in something they don't understand. So if you're gonna come into the space, come in with the right mindset. Come in with the mindset that you wanna be educated, you wanna learn. I have a ton to learn in terms of cryptos. My experience has been mainly through things like stocks, indices, commodities, foreign exchange for very many years, but the same patterns apply. It's the same thing. Once you are good at analyzing and you know how to trade, you know how to manage risk, you just understand it and you adjust to it. You realize, oh, this is more volatile. It's the same thing for currency, right? For those that are traders that you trade currency, it's the same thing. If you're trading something like pound Kiwi, you naturally know it's more volatile than trading something like euro dollar, right? This is just common sense, but there's more volatility in different instruments. So hopefully that's given you something to think about. Thank you so much for joining me in this episode. Stop trying to call the top of Bitcoin. Have an incredible day, morning, evening, and I'll catch you in the next episode, guys.